Hello friends, a very warm welcome to my channel. In this video, we are going to analyze another microcap company which is into the logistics sector. So as you know, the Indian economy is growing very fast and the logistics sector will play a key role in the growth of this economy, as nothing can move without the support of the logistics sector, and this sector will witness a lot of tailwinds in the next few years to come. Another thing to keep in mind about this sector is that this sector is very highly competitive. So the analysis which you do of any company should be very minute, and you should be carefully monitoring the stock or the company's performance time to time if you are invested in this sector. So the company we are going to talk about in this video is Tiger Logistics, and if you are new to the channel, please do subscribe and hit the bell icon, and if you are not a part of our Telegram channel, search my name on Telegram, find the channel which is in the bottom left of your screen, and do join today as we will discuss a lot of interesting news, views and daily market analysis on our Telegram channel. So let's get started and do the analysis of Tiger Logistics. So for international shipments, generally there are two types of shipments. One is the full container load, which is FCL, and LCL is part container. So Tiger Logistics is one of the leading players in terms of volumes when it comes to the full container loads in India. Initially, they started as a CHA, which is a custom house agent, which do the clearance of goods on import and exports in India in the year 2000. And the company has adopted an asset light model. Why we are calling it an asset light model is the company doesn't own any shipping vessels, or they don't own any containers, neither they own any logistic vehicles like trucks and all for the domestic transport. They just do the booking and they facilitate all these movements across the globe. So they take orders from the customers and they do the bookings and manage the entire framework on their behalf, but the actual carrier of the vehicle will be a different company. So they don't buy any fixed assets. On an average, this company is handling about 4,520 feet containers per month. A brief of the management. The promoter of this company is Mr. Harpreet Singh Malhotra. He's also the managing director of the company. He is the first generation entrepreneur who has scaled up the company to such heights in a short span of time. He has completed his diploma from IIFT and graduation from Delhi University. He has more than 22 years of experience in this industry, and earlier he has been working in the auto industry, and he was a pioneer to bring the BMW bikes to India. Let's understand a brief journey of this company. As we discussed, they started in the year 2000 as a CHA, and in 2004 they started the multimodal transport operations. Now what is multimodal transport is, there are different modes in which you can transport the goods like air, ship and road transport. So they work in all the three modes. That's why the company is into the business of multimodal transport. In the year 2013, they got listed on the Bombay Stock Exchange, and in 2014 they started their transportation business. In 2016 they got listed on the main board. They initially started with the SME category, and in 2018 they reached a milestone of 300 crore turnover. Recently, in the year FY22, they crossed a 600 crore turnover mark. Now let's understand the business of the company. We can broadly divide the business of the company into 7 segments. The international air freight, which deals with the international carriage of goods through the airlines. International ocean freight. Project logistics, which is specifically project related contracts. Domestic freight services, which is domestic movement of the goods within India. Then customs clearance, which is for imports and exports. Supply chain logistics, where they tie up with different companies and manage their entire supply chain. And cold chain logistics, which is specifically for certain products which are perishable goods and medicines. As we have discussed, the company is one of the leading players in India in the FCL category. So to understand the process, when somebody wants to export the goods, there is an exporter, then a freight forwarder, then the shipping lines are the ones which carry the goods, then the freight forwarder again does the clearance and everything at the import port, and the importer gets the goods. So the freight forwarding service at the export and the import port is done by Tiger Logistics, whereas the shipping lines is the different. So the company has a asset light business model where they partnership with the other carriers of the vessels outside India as well as within India transport. So this asset light model gives the company a lot of flexibility to increase or decrease the contracts as per their requirements, and they don't have to invest in the purchase of any vehicles. The liquidity of the company remains strong, the balance sheet remains strong, as well as the return ratios and the margins are on the higher side because they don't have any fixed cost and depreciation. Now specifically, let's discuss the different services which the company renders, starting with the international air freight. So international air freight is regarding the carriage of goods from India to abroad or from one country to another through the airlines. Again, in this air freight, depending on the urgency of the goods or the priority, there are different categories like the general, special and express. Along with the air cargo, they also provide facilities from taking from the door of the exporter to the airport, then after landing from the airport to the door of the importer. So door to door transport, airport to door transport. So depending on the requirement of the customer, whatever he wants, whether he wants a door-to-door contract from this door till the delivery of the next final destination, the entire thing can be handled by Tiger Logistics, or a part of the thing also can be taken as a contract by Tiger Logistics. Then the next service is related to the international ocean freight. Again, in ocean freight, there are two varieties, the full container load and the part container load. So both the kind of bookings are taken by them, and in this also they can do door-to-door service as well as ex-warehouse or FOB services. Now talking about their project logistics, where they get a specific contract from a company to handle the entire project related to the logistics. They are specialized into moving heavy goods or oversized goods. They are also experts in moving expensive goods where extra precaution has to be taken in terms of movements of the goods. So right from the planning stage till the execution, the entire thing can be taken up as a project by Tiger Logistics. They are also open to taking contracts from the defense sector, like they have been involved in transporting 228 aircrafts of HAL from Kanpur to Germany. They have also done a project with Ashok Leyland in 2001, where they exported the trucks of Ashok Leyland to United Nations Peace Mission. So by this you can understand they are having good capabilities to take up big projects in the logistics sector. Coming to the domestic freight services, this is related to the movement of goods within India. So within India, they have a huge network of offices, and whatever transport has to be done within those locations is very easy to do through them. They are dealing with both perishable and non-perishable goods. Any kind of oversight or hazardous goods also can be transported through them. Now coming to their original service, which they started with, is the customs clearance. They are expert in customs clearance services. In customs clearance, as you know, it is very important to keep a good relationship with the customs officers. So it's called licensing. And Tiger Logistics is good at licensing. They already have good relations with them. And whenever it comes to some peculiar clearance of some goods, where some technical knowledge is required with respect to correct classification of goods and all, they have a team which can do the process very smoothly. Now coming to the next service, which is a supply chain logistics. For any company to manage their entire supply chain, they can outsource their service to Tiger Logistics. They will entirely handle the project. They will have that systems and processes in place to manage their inventory as well as take care of their movement of goods across the country as well as outside India as well. Coming to the cold chain logistics, this requires special kind of vehicles where the vehicles have the cold storages in them, which are able to carry perishable as well as some medicines or stuff where the goods have to be preserved in a specific temperature. So such kind of logistics is also smoothly carried on by Tiger Logistics across India. So these are the 7 segments of services which is rendered by Tiger Logistics. So by this you can understand they have a diversified portfolio of their services, and they have balanced their services and de-risked their profile by offering all these kinds of services. So they will have a one-stop shop solution for all the customers who come to them for any logistics requirement. In terms of global presence, they have their agents and partners across the globe, as you can see, in almost all the major countries of the world. In terms of sectors, they have customers in almost all the industries like commodities, then consumer durables, cold chain logistics, defense, automotive. But you will observe that the majority of their revenue is coming from the automotive segment, as we discuss further. To look at their clients, you see all big names which rely on them for their transportation facilities like ABB, Honda, Seat, Bajaj, even the PSU entities like HAL, DRDO. Industry-wise revenue, if you see in FY22, almost 90% of the revenue came from automobile sector, and the other sector contributed minor revenue. So this is a big risk when they have an exposure of almost 90% towards one sector for their revenue. In terms of segment-wise classification, 95% of the revenue comes from the multimodal transport. Customs clearance generates about 4% and 1% by transportation. So although the company has different offerings in their portfolio, but their exposure to a particular industry as well as exposure to one segment of services is high, which generates risk for the company as well as the investors. The top 5 customers' contribution to this company is going up. It has gone up from about 35% in FY19 to almost 84% in FY22. So customer concentration is also a big risk in this company. Look at the volumes of the 20 feet containers which the company has done recently. In FY18 they did about 65,000, which went up to almost 97,000 in FY19, which is the pre-COVID time. And post-COVID they have done about 36,000 and 40,000. So they have still not reached their pre-COVID levels. Whereas the other logistic companies, there are some logistic companies which have almost started doing well as good as their pre-COVID levels. Then in spite of not reaching the pre-COVID levels, how is the revenue going up? This is because the cost of freight has gone up. So in terms of volume, the company has not grown, but in terms of the ticket size of every sale what they do, of every contract what they enter into has increased. That is why the revenue is appearing to be high compared to the pre-COVID levels. So this is where you have to be very careful when you read the financials of the companies. Let's talk about the industry, the logistics industry in India. $215 billion is the size of the logistics industry, which is expected to grow at more than 10% CAGR up to FY24. So this is a big opportunity. India ranks 44 out of 160 in the countries across the globe in the logistics global LPI index. The logistics sector contributes 16% to GDP of India, which can go up to almost 25% going further. And $197 billion is the merchandise export presently, so which can go up to almost $400 billion, which is almost 33% increase, which will generate a lot of opportunities in the exports of logistics segments in India. Some industry trends which you should look for in the logistics sector. There can be steady increase in the industrial production, which will generate demand for more logistics services. There will be increase in the railway traffic as well as the capacity of the ports. E-commerce will generate a lot of opportunities, which is in fact already generating a lot of opportunities for the logistics sector. The logistics sector will need a digital transformation. We can't traditionally work manually now. So there will be different apps and softwares which will control the entire movement of goods. So the logistic companies have to get digitalized. Make in India initiative will increase the requirement of the logistics services, and the government is also taking various reforms like building better roads and also giving some incentives to this sector so that the logistic network in India becomes stronger. How is this company better than the other companies in this sector? The company follows a asset light model. They don't buy the vessels, they book them. So in one way it is a little risky also, because the control of movement of goods goes to the carrier. It's a one-stop solution offering several services under their bracket, almost 7 categories we have discussed. The company is moving toward green logistics. They are planning to set up a fleet of vehicles where the vehicles use only electric vehicles as a fleet of vehicles, so that the companies which want to be carbon neutral or environment friendly can book their transportation through the green fleet of vehicles through Tiger Logistics. And the company is also developing a platform which is a completely digital platform, and the company claims that the platform will solve a lot of problems in the logistics sector, completely automate the things of movement of goods and the pricing of each contract, and that can be a game changer in this industry. So that is one competitive edge which we can look for. In terms of growth outlook, they have crossed 600 crore revenue mark, and they are aiming to cross about 2000 crores revenue by FY27. So it is a expectation that the company is looking for at a growth of almost 30% every year. Now, how will the company achieve this goal? Is by getting digital, automating all their processes, entering new geographies within India, penetrating more within India as well as across the globe. They are even open to acquisitions of smaller companies and growing inorganically. And green logistics is something where they'll use EVs. So the company has opened sales offices in Bangladesh, South America and the US to expand their geographical presence. And specifically when we talk about their digital platform which they are going to launch, it will be a price discovery platform which can automatically discover the price between the supplier as well as the customer. Instead of manually doing the documentation and all, everything will be electronic and it will be fast, so that immediately the bookings happen. The process will become transparent. The customer will know where their goods are, at what stage, when they will get delivered. Everything about the clearance also will be available. The entire value chain will be accommodated in that, right from the first mile delivery till the last mile, as well as international logistics. So in terms of risk, what are the risks as a company or as an industry which this sector can face? This specifically when we talk about this company, they are making very low margins. They just make about 2-3% margins at the net level. So if there is any kind of a pressure in terms of cost, the company is entering into loss as they entered in FY19 and 20. If there is any slowdown in the economy, the sector might be affected badly. There is customer concentration risk, as just 5%, top 5 customers contribute a majority of the revenue in the company. There's a risk of concentration in the specific industry in the auto sector. competition risk, as this sector is highly competitive, and that's why the margins are very less. I find the company has a lot of dependency on the promoters. There's no independent or a professional board which is managing the company yet, and the promoter's wife itself is a CFO. For this sector to expand or scale up, things have to become digital, so the staff is not very skilled or educated, so it will be difficult for people working in this sector to adopt to the new technologies. There is a risk of loss in transit, although the company can mitigate this loss by having insurance, but still there is a risk. And we have discussed that the exposure to the auto sector. So these are the risks which you should watch out for when you are investing in this company. Now let's talk about the financials of the company. The revenue has been range bound from FY 18 to 21. In fact, it has gone down, but there is a sudden spurt in revenue in FY 22 at 600 crores. We have to see whether this growth momentum continues further or not. In terms of EBITDA, the company entered into losses at EBITDA level in FY 20 and 21, but they made a profit of about 38 crores in FY 22. EBITDA margin, it is very difficult for us to judge what is the normalized margin of the company right now, because the track record has not been consistent. So broadly you can assume somewhere around 4 to 6% has been their normal EBITDA margin, which is quite low when you look to invest in companies as an investor. In terms of profit after tax, again they made losses in FY 20 and 21. They became profitable at 34 crores in FY 22. We have to closely see whether this profitability continues at what level going in the future years. The share capital is the same at 11 crores. The reserves are 64 crores because they made losses. The reserves got reduced in FY 20 and 21. The borrowings have gone down, and it has become a debt-free company. The trade payables are okay. They are in line with the revenue which the company is generating. In terms of fixed assets, you observe that there are hardly any fixed assets in the company, although the company is doing 600 crore revenue, because the company follows a asset-light model. In terms of trade receivables, they have about 70 crores of trade receivables on the balance sheet. So this is something which you have to closely watch out for, because in such companies where there are no fixed assets, majority of the money is parked in the working capital. So they have to manage their trade receivables and cash and all these things well, so that the liquidity is good in the companies and they don't end up losing money. The debtor days are 41, so it is good as of now, but we have to see whether these debtor days remain and they don't go back to their earlier 100 or to 120 kind of levels. In terms of cash equivalents, they have about 32 crores on the balance sheet, and operating cash flow earlier was negative, which has turned positive. They generated about 44 crores in FY 22. In terms of free cash flow, almost the entire money which is generated in the operating cash flow becomes free cash flow for this company. Why? Because there are not much investments in the fixed assets. In terms of ROCE, earlier it was very low, and now it has gone up to about 59%, but I'm sure these are not sustainable levels, so we have to see going further what is the sustainable ROCE and ROE for this company. In terms of shareholding, the promoters hold about 71%, 70.2% in the company, and publics about 28.8%. So in terms of shareholding, it is good, but the promoters have reduced their holding from 73.7 to 71.2 recently. Now in terms of competition, there is a huge competition from both listed as well as unlisted, organized as well as unorganized players in the industry. Just for the sake of the valuation analysis, let us compare a few companies which are listed in this category. Tiger Logistics has a market cap of about 350 crores, does a revenue about 600 crores, so market cap to sales is almost half, and EBITDA is about 6%, ROC 59, which may not be a normal figure, PE about 10 and PB ratio about 4 times. Comparing with another small company called Lancer Containers, market cap is about 1400 crores and revenue about 600 crores. EBITDA 8%, ROC 42% and PE 33, and market cap almost 2 times and PB ratio 10 times. So when you compare it with such companies, you feel that the valuations of Tiger Logistics are very cheap. Comparing with another company called Accuracy Shipping, the market cap is 300 crores, whereas the company does a revenue of about 800 crores. So the market cap to sales is just 0.35x. EBITDA is 6%, ROC is about almost 19% and trades at a PE of 20 times and PB ratio of 3 times. So what you will observe in this sector is, although there are different companies listed, the valuations given to each company will differ drastically. You will not have an apple to apple comparison. There are different services which the companies render, as logistics sector is a huge sector. So depending on the services what they do, depending on the kind of results the company is getting, depending on the margins the company is maintaining, depending on the consistency of the performance, the valuations are determined by the market. And as soon as that consistency is gone or there is a fall in the performance of the company, the valuations get derated in this industry. So it is very important for you when you are investing in this sector and you're choosing a company, entering at some level, you have to closely watch the performance of the company, and you also have to put a stop loss. because if you don't put a stop loss when you are investing in a company in this sector, if the performance deteriorates, then whatever you have earned in the last few years will go for a toss. So in terms of valuations, presently Tiger Logistics looks cheaper, but this cheap valuations are subject to their consistency of performance going further. If this trajectory of performance and this growth which they are aiming for 30% every year is maintained for the next few years and they achieve that goal of 2000 crores, then these valuations are very cheap and shareholders will make a lot of money. But if they, by any reason, whether internal or external risk, if they are not able to achieve that goal, then these valuations itself will be unsustainable. The stat auditors of the company are Messrs. VK Sehgal and Associates. The auditor's remuneration is about 9 lakhs. ROE is about 57%, which may not be sustainable. Dividend yield is about 0.34%. The director's remuneration is about 1.2 crores. Again, the volume versus value growth is one point which you should keep in mind. We have discussed earlier that the volumes have not reached the pre-COVID levels, but the value has gone up. So that also you have to closely watch, because the freight costs have started coming down. So even though the company may do higher volumes going further, the value terms of the sales may not be as good as before. And overall, when I have checked, I have not found any corporate governance issues in the company in the annual report or anywhere on the internet. Now you look at the chart has not been a steady growing chart. There are ups and downs. So these ups and downs are because of the non-performance of the company in a few years. So this is the risk which I am talking about. So when somebody enters at these kind of levels of 200, 300 and he doesn't put a stop loss and the company stops performing well as they were performing earlier, you see the downside, it has gone even below 50. So this kind of a challenge is there when you're investing in this sector. Recently you see that the chart has shot up, the stock price has gone to almost cross almost 300 again. So it's a very volatile script, so you should not jump and enter. Choose any support level at somewhere around, let's say 200 or so. Enter at that kind of a support level, a stop loss of some 20-30% and closely monitor the results. And if at all you find that the results are not satisfactory going further in the next couple of quarters, you have to come out in stocks like this. But looking at the present price, which is at all-time high, it doesn't make sense to chase the stock price at these kind of levels. So this is about Tiger Logistics. Just to summarize the analysis, it's a fast growing company where the promoters are well experienced in this industry. The growth plans are pretty fast. They are expecting the company to grow by 30% every year and reach the 2000 crore mark. They are going for new initiatives like the green logistics as well as the digitalization, launching the digital platform, and the sector itself is good. For the next few years, you will have tailwinds in this sector. In terms of antithesis points, the margins are very low. If at all something goes wrong, immediately the company might enter into loss. In terms of performance in the past, the performance has not been consistent. So that is something which you have to be very careful going further. Exposure to auto sector is very high. Almost 90% revenue is coming from auto sector. Top 5 customers are generating a majority of revenue. The company is dependent on the other companies for the transport of the vehicles, as they are only doing bookings. They don't own any vehicles, and the competition in this space is very high. So these are the antithesis points when you are investing. So now I hope you have got the complete clarity. You know the positives, you know the negatives, and you are in the good position to take the correct decision of investing in the company. So thank you for watching this video. I hope you like the analysis. If you like it, hit the like button. Don't forget to join the Telegram channel. Share this video with your friends if you like the efforts. If you want me to make videos on your favorite topics, please mention the name of the company in the comments below. Going further, I will start covering again a few small cap, mid cap companies also, along with the micro caps. Thank you for watching and have a wonderful day.